Good morning. We are going to cover Chapter 12-2, Determining Payroll Tax Withholding today. The formula, similar to the accounting equation that you need to learn pretty badly, is total earnings minus deductions equals net pay. And starting with total earnings, we did that in Section 12-1, as you recall. We looked at regular earnings and overtime earnings, and we knew for overtime earnings that anything over 8 hours in a day, 40 hours in a week would be paid overtime rates, and overtime rates are typically 1.5 times the regular rate of pay. So we take that total earnings minus deductions. That's really what this section is all about. We're going to do deductions, and then that is equal to net pay. And if you recall, net pay is basically just take-home pay. Take-home. Kind of hard to write like this, sorry. Take-home pay. So the types of deductions that we have that we're going to talk about in this section, there are 3 that are voluntary listed there for you: health insurance, retirement plan, and other. And we'll have a slide on each of those. And then we have these other 3 which are required by law. They're not your choice, you have to do them. And that's federal income tax, which you'll see me write as FIT most of the time, and then Social Security tax, SFs, and Medicare tax. These are all collectively called payroll taxes. And the thing that's important is that they're all based on total earnings, and total earnings, again, is that number that we figured out in 12-1 for regular and overtime, and it is the basis for a lot of calculations. So if you screw up total earnings, it's going to be a problem for you in this section for sure. So these last 3 kind of all go together, and it's trying to explain this process that the employee has to pay these payroll taxes to the government, but the government's not going to go collect it individually from each of them. So what they do is they require businesses to collect it from the employee and just pass it on to them. So the business is really just a collection agent. The money's not theirs. It was the employees paying the government. So because of the fact that the business takes it out of the paycheck for the employee, it's a liability to the business because I've taken the cash out of their check and I'm obligated to owe it and pay it ultimately to the U.S. government. So that's kind of how all the taxes, payroll taxes, work. So let's talk more specifically about each of these. So FIT is one of the types of deductions we're going to talk about, and again, it's federal income tax. I have in parentheses there that it is also SIT, LIT, and CIT, and what I mean by that, you also have state income tax, local income tax, and county income tax that you have to pay, but we're going to ignore all that for this class purpose. So just more percentages that you have to pay to the government as an employee. So all 50 states require federal income tax, and to compute federal income tax, we're going to use a tax table, and those tax tables are on page 353 and 354, as you can see. When using this tax table, the 4 things that we need to know are total earnings, marital status, pay period, and withholding allowance. Again, total earnings, we know how to compute. The marital status comes from their documents when they first started signing up for things such as a W-4, which we'll talk about. The pay period is weekly, bi-weekly, semi-monthly, or monthly. And then this 4th thing's the really only new thing, which is withholding allowances. And withholding allowances come from a form W-4, and we'll look at one of those here shortly. And what a W-4 has is the number of people that you legally support, so that the taxpayer supports, including themselves when they do this. So the employer has to have this on file for every employee, so that day you start your job, you tend to fill out this form and you may not even know it. So they have to have one on file for you. But here I have the black asterisk because that's the most important thing that you can learn here. The withholding allowance, so the number of people that I'm supporting. The bigger that number is, the less tax that gets deducted from the paycheck, which means my net pay is higher. And that should make logical sense to you, that if I'm supporting a lot of people, then I need money and cash right now, so they take less out of your check and withholding so that your net pay is higher, so you can actually pay for all those people that you have. Okay? And then the only other thing about withholding allowance I'd know for quiz and test purposes is you can be exempt from having anything withheld if you make less than $1,050 of earnings and $350 of unearned income, such as interest or dividends. And then no one else can claim you as a dependent. Okay, so you're exempt in that regard. So for you guys, you're probably exempt if you're making less than that. So let's look real quick at this employees withholding allowance certificate, and hopefully you can see this pretty well. But the name and address, and again, you fill this out the first day, goes here. The marital status, you have to say whether you're single or married or what. Give them your Social Security so they can take taxes out of your check and pass them on, and then you sign it and date it, and you specify here on this line how many withholding allowances you are. So John probably has a spouse and a couple kids, and that's why he has put 4 on this. Okay, the next thing is Social Security taxes. So Social Security tax and Medicare tax. Down here at the bottom, I kind of have that FICA is Social Security and Medicare added together. So the Federal Insurance Comportability Act that Congress set, they're the ones that set Social Security and Medicare rates. And together those rates are 7.65, and they have been that for a long time. So together, if you see someone say FICA, they're talking about both of them, but we're going to talk individually about them. So Social Security tax, the employee has to pay it. So it's taken out of my check at the rate we're going to talk about. But you also should know that the employer has to pay it as well. So if they take $200 out of my check for Social Security, they have to match it, and they have to pay the same amount in. For those that don't know, Social Security tax is for old age survivors and disability insurance. So it's kind of the retirement. It's the thing we talk about, probably won't be there for you. And self-employed have to pay this too. So they have to pay into this federal government retirement plan as well, or insurance plan, okay? The computation is pretty simple and straightforward. You literally take that total earnings number that we've been talking a lot about and multiply it times 62.2%, which is 0.062 in decimal form. The only thing that's weird about Social Security tax is this special rule here, though. So you don't pay any more tax. They don't pay in any more Social Security once your accumulated earnings, which we talked about in the last section too, once your accumulated earnings for the year is greater than this tax base. So again, total earnings year to date for one employee is greater than or equal to the tax base, which right now is $106,800. Okay, but it's the maximum amount on which tax is calculated. So what that's trying to say to you is that once I make $106,800, I no longer pay anything in, nor does my employer pay anything in for me. Okay, so they're saying we'll force you to save up to a certain percentage, but once you're making that much money, you don't need to save anymore. You'll have enough. So if that means that I hit $106,800 in March during the year, they quit paying in at that point. So they'll pay in January, February. If it's not until August that year that I make $106,000, then I'm paying tax all the way till August till I hit that number, and then I quit. Medicare tax is the other part of FICA. So Medicare tax, and it's the same thing. The employee has to pay it. It's taken out of their check, and then the employer has to match it and put the same amount. So if they take $100 out of my check for Medicare for me to pay, then the employer's going to pay that too. So it's hospital insurance. Self-employed have to pay it also, similar to up there. And the computation is, again, total earnings times 1.45% or 0.0145 if you have a hard time on the calculator. So the rule for this one, no tax base involved, and you just keep on paying all year long at 1.45%. So I think it's important just kind of to reiterate then that if the employee and the employer pays, I pay 1.45%, and then the school, since I work for them, pays 1.45%. I'm getting 2.9% of my salary every year of my total earnings. I'm getting that put aside for Medicare, whereas up here, 6.2% by the employee and 6.2% by the employer, then 12.4% of my total earnings is going in every year to pay for my retirement. And we'll look at these tables here shortly. I just want to get through all the slides while we're here. So then the last thing is health insurance, retirement plans, and other, which again are all the voluntary deductions. So health insurance is the employee pays. I choose to have it taken out of my paycheck. The premium for the insurance, the health insurance premium, is passed on to the insurance company. So again, the employer's just a collection agent. Retirement plan, employee pays it. I choose to have it taken out of my check. The contribution that I'm making to the retirement plan is passed on to the investment company. The employer, again, just a collection agent. And for quiz and test purposes, I'm not going to cover it here, but you might want to read about IRA and Roth IRAs on page 356 of your textbook. Both columns is pretty important that you understand that distinction. And then there's other deductions I can have them take out of my paycheck as well. So that'll get passed on the applicable company. So I had like a lot of my charitable contributions and things like that taken out of my paycheck, and then Westfield High School just passes that on to whatever charitable organization needs it. So there was the W-4 that we've already talked about. I want to talk real quick for federal income tax purposes. We said that we use the tax tables on page 353 and 354. So here is the tax tables, and the one that's in the book is for semi-monthly pay. So you see here that it is semi-monthly payroll period, and this is for a single person, and if we went to the next slide, is for a married person. Okay, still semi-monthly, and then the way we use this will become pretty obvious here. So we're in the married one. If our employee is married, we locate their total earnings. So it says the wages are at least this much but less than this much. Okay, so we're going to locate that on there. So if we are looking at the level that they have up here, we have at least $1,460 but less than $1,480. And then the person, we say, has 4 allowances. So John had 4 allowances, okay? And because he had 4 allowances, we follow that down and we follow that across, and where those intersect, that's the amount of the federal income tax that he would have to pay, okay? So that number there is the amount of federal income tax that John will have taken out of his paycheck. The only thing that I want to make sure that you think about here is it's at least but less than. So that line right up above went to 1460, and then this says at least 1460. This at least is at least or equal to. So equal to, greater than, or equal to. This is just less than, okay? That's important when you're trying to use those tables. So that covers really this whole section, and I'll do the other 12.3 and 12.4 lectures here before long.